Okay, welcome to another edition of Real Estate Investor Talk, and I'm sitting with Lisa Bathurst of Hurst and Wills. She's an expert in offshore property investment, and we're talking particularly about investing in the UK. So let's talk a little bit about the South African investor. I mean, they've been investing in the UK for a number of years. In fact, the UK is number one.
Well, traditionally, the UK has always been a good market because it's a good land hedge. You know, the pound is very well known for all these years as being a hedge against the rand. At the moment, the pound's devalued.
Yes. So
at the moment, you can pick up a property for a lot less than it would have been a couple of years ago.
Sure.
So there's one reason why now is good, because this devalued pound isn't going to last forever. This is a temporary little blip, partly probably due to Brexit and a few other factors. So this is a good time for that reason. Also, in South Africa, you're facing a lot of uncertainty. We thought things were looking a bit better once Ramaphosa got in. Now it all seems very scary and uncertain again. And so in times like that, I think it makes good sense to get some of your money offshore if it isn't already, invest it into a high-yielding property that is going to show you returns for many years coming, and just gives you that little bit of added security. Look, I mean, at Hurst and Wills, we advise across all categories. So we have an acquisition service where we can find commercial property. A lot of clients are looking for that at the moment. But our main focus, and I would say, because of your average investor, they're looking for residential property. So we have everything from lower cost residential to luxury residential. And that goes across different sectors of the UK. So we do have, some great options still in London for those who can afford it. It's still a very good investment.
Sure.
People shouldn't be put off that.
Yeah.
The Northern Powerhouse, which you've got Manchester, Liverpool, Leeds, Sheffield. Those are all areas that are seeing huge growth. I mean, in Manchester, it's predicted we're going to see 28% growth in the next 3 to 4 years. So obviously that's a great investment. That's a no-brainer from a long-term investment point of view. The yields that you see up north are much higher than anything you see down south, for example.
Just elaborate a bit on the reasons why that is happening. Because London hasn't had big growth over the last couple of years. It's been a lot slower if we look historically. Do you want to maybe share that?
Yeah. During the recession in 2008-09, the building in the north of England pretty much stopped. I mean, developers went out of business. There were no buildings going up, and there was quite a shortage of housing, as there is across most of the UK. The government pledged a lot of money, put billions and billions into infrastructure in the north. They're currently they've passed plans to build an HS2, which is a high-speed train, which will connect Manchester to London in an hour, which is going to be a game changer. I mean, essentially, people can live in Manchester and work in London. And there's been a lot of money that's gone. $1 billion has gone into the airport. So Manchester's now got a huge international airport. So a lot of money goes into infrastructure, and with that, has attracted a lot of foreign investment. And so development's all back on track. And this plan for Manchester and for the Northern Powerhouse, which is the surrounding cities, it's a 20-year plan. So this isn't do this. It's all going to be over in a year or two. It's got a long way to go, so getting in now is a really good idea, because when you see what the government's got planned for the north, it's very impressive. And parts of the north, I mean, it's like a mini London. It's sophisticated, Michelin-style restaurants, and everything you'd expect in London you can now find in Manchester. And also from a business point of view, you've got 80 of the FTSE 100 companies now have head offices and presence in the north. So that says a lot. But look, for a 2-bedroom apartment in London at the moment, like I said, you need about £600,000-700,000. In Manchester, you could pick one up for about £250,000 to £350,000. So you can get 3 apartments up north for the price of what you can buy one in London, and the growth up north is projected to be certainly much better. So that makes financial sense. The student apartments, Liverpool, Nottingham, Manchester, you can pick up for around £100,000 at the moment, sometimes less. I mean, we're really talking about averages. And residential apartments, Liverpool is a lot more affordable than Manchester. Manchester's a lot more affordable than London. So it really depends on where you're buying. But like I said before, for a price point of 1.2 million, you can get into the UK market in a very good property. So that's interesting. I think it goes all the way up to £500,000, £1 million if you're in London.
And it's wonderful chatting to you, Lisa.
Thanks very much.
Thank you.